Hey guys, welcome to this week's Swyftx Squawk with me, Pav, lead market analyst here at Swyftx. And we're going to dive into some of the key stories making news this week, but overall we wanted to cover reasons why we think bears could be in trouble. And a lot of this has to do with a lot of the sentiment we've seen in the market for the last couple of days and weeks. Obviously, since the start of February, we've seen a massive sell-off after the Trump tariff scare. I've seen fear and greed really chop around where we currently sit at 40. But the market has definitely fallen into a bit of a gully of fear. And when we look at just the general sentiment in the exchange data, and we look at the current positioning that traders are taking and investors, it's mainly on the short side. And there is a heavy concentration up until 100K here. The main key takeaway here is at the time of recording, we're seeing up to $4 billion worth of trade value that could be potentially liquidated should we see a push towards that 100K figure on Bitcoin specifically. This also comes at a time where we've seen volatility absolutely sucked dry out of the market. We're now trading at volatility levels not really seen since about the middle of 2024. And it really does set up the scene for a potential short squeeze scenario, which we'll break down a little bit more in the chart in a minute. Also wanted to touch base on Brian Armstrong, CEO of Coinbase, coming out swinging support for meme coins and the industry as a whole. Obviously a lot of bad things to say about meme coins the last couple of days, but he's really come forward showing his support that while meme coins may be speculative, we should keep an open mind about where meme coins are going, even though some of them may seem silly, offensive, or in this case, most recently fraudulent. He believes it's just a case of we need to purge the bad actors and really continue to look to building everlasting value in the industry. He did mention that he believes meme coins are a bit of a canary in the coal mine. In other breaking news, we have seen overnight the most recent release of the minutes from the Federal Open Market Committee meeting in January. This is specifically tying to US monetary policy. Lengthy document, but some of the key takeaways that we're able to distill from this one was a notable mention that the committee may look to cease some of its more restrictive policy measures, such as balance sheet rundown, which is when they take the matured bonds and don't issue replacement bonds, a form of tightening policy currently. That being removed might be one step in the direction easing policies, and we might see a potential uptick to key metrics like liquidity, and that may blow very much well positive tailwinds for the crypto markets, but still the policy environment is definitely an evolving one, but one we're watching very closely. Now turning to some Bitcoin analysis. As we mentioned, that potential short squeeze scenario setting up, the charts are showing us that we have seen for the month of February, the yearly open of 93,500 really hold up so far. Some activity that is showing some support. As these bands start to compress and narrow, it does usually result in some sort of breakout or expansion, which again points to the volatility that we haven't been seeing in the market. So whether we see a move to the upside or downside, we're yet to see. Potential moves for the upside will be towards the February monthly open, which also lines up with some of that short liquidation data that we're seeing. There could be enough fuel there to take us there just in positions unwinding. At the same token, if we do see the yearly open fail and we do fail to hold these levels, we could see the market move towards that January low of 89,200. But that's all from me today. Thank you very much, and we'll catch you next week.